Hey guys, I welcome you in this beautiful video. So there's something that I've observed as I was trading step index. Now, there's something that I've observed in the previous weeks. Now, the way the market has been behaving lately. So I just wanna let you and try to break down the problem and then go to the solution. So when you can observe the way the market correct, the way step index correct, we're just gonna start with maybe let's start with this area here, just behind here. So we can see that we had this low and then we had that high, which was a beginning of an impulsive, let me just draw it, going all the way down then, and then we have an interesting move here. We have an interesting move here, which was tempting, the way the market corrected, and then it bounced just at the same level with that low. It was tempting to apply the method of retest and say, okay, because the market is moving aggressively, this can be our main corrective, this small move here. Why? Again, you can say that because this is one of the biggest corrective compared to all these small correctives here in this wave. This is the biggest, so you might take this as like the main one where the market is correcting and then it will go all the way down. However, when it bounced here on that same area, which was key because it was tested before, when it bounced, it went all the way down, but it didn't go far, meaning if you were to enter as a trader maybe somewhere here, you were not gonna make anything. So it went down, and all of a sudden that's when the main corrective began. So I just want you to take note and keep it in mind what I've just illustrated. And then we come here again, you observe this impulsive, and because here is one of the key levels, again you think that okay, because the sellers are a little bit stronger, they have corrected using a horizontal correction, which is something that I also talk about, a horizontal corrective wave. And then when it breaks out here, you might think, okay, let me just observe for selling opportunity, and you find that no, the corrective wave hasn't begun yet. Here is the main one, and then that's when the market begins to impulse again. So again, the last example, then we'll deal the solution. The last example is this one. You can observe here and say, okay, wow, this is an impulsive wave, this is a corrective wave, and when it is broken here, you might think that okay, maybe a sell is going to begin here, and all of a sudden a sell doesn't begin, the market continue to correct and correct in a very, very aggressive way. So what you should be doing as a trader to avoid all these issues of entering or anticipating a move earlier, you need to understand firstly that before the market can correct, there should be some market activation. Before the market takes a decision, or before the market changes direction, there should be a backley, there should be a market transition between both the players. Let me just erase so that we can illustrate clearly. So here, what happened here is that okay, the sellers, they were controlling the move, and then the buyers, remember that the corrective has to come, it's not yet here, and when the corrective is to come, you will observe by the market slowing down. So this is not the main corrective, but this is the market slowing down, indicating that now the buyers, they are getting angry and aggressive. They want to give a move, which is in this case that one. They want to do something, and again, it's a sign that okay, the sellers, they are getting weaker and weaker. So we need to observe the market slow down before we can observe the corrective. So there need to be a change in the market volume, in the market momentum. So I just want you to keep that in mind. There need to be a change in the market momentum. There also need to be a fight. Now I'm also gonna help you with something on how to observe when you should actually enter. And again, here you can see that okay, here was the beginning of the move here, and if you can see clearly, the way the market was correcting here, it corrected slower, and this high couldn't approach that high. So it means that in this area, the market was still favoring the sellers. It wasn't yet a corrective, the market was still favoring the sellers, because if you can look at the structure, it is still playing on the territory of the sellers. So meaning here, this was the area where the struggle of the sellers began, not the actual corrective. That's where the struggle began, and all of a sudden when when we think that the market was now beginning to move, that's when the buyers kicked in with their impulsive moves. So remember one thing, that before you can enter as an impulsive, you shouldn't enter from an incomplete pattern. This is key. You shouldn't enter from an incomplete pattern. For an example here, when the market broke out this level, it gave us a low, but then this doesn't mean that you should just press the sell button. This doesn't mean that you should press the sell button. Wait for the pattern to be complete. When will the pattern be complete? Maybe when we get another low, another high which is lower than that one. As long as there isn't a high which is lower than that one, then the market is not yet for a sell, is not yet the ripe for selling. So you should always wait. Don't just take decisions anyhow. You should always wait for the pattern to be always completed. You should always wait for the pattern to be always completed before you can make a decision. Wait for everything to be clear. Wait for the territory to be a little bit cleared. I hope that one is making sense. Even in this area, we can see here, if I may include this low here. So maybe let me just start by drawing it here. Although you can even add another one here, but remember that trend lines, they always shift. Trend line, they always shift. So the reason I'm drawing here, because I want to cover all these areas which are areas of interest, which are very, very key. So if you can see here and you observe the breakout, after the breakout, we didn't get a clear structure of the sellers, a structure like this, which will show you a lower high and a lower low. Although we do have a lower high here, but it was still on the upper side, not below the breakout. So after the breakout, we need at least to have a high that is retesting that breakout before we can make a decision. So I just want you to keep that in mind. Make sure that whenever you take a trade, or whenever you do something, don't take a decision or don't enter before it is clearly confirmed. And one important thing, guys, I just want you to know that although I can analyze this method and give you all the details, you need to know that sometimes one day it will happen that maybe you do everything right and the market still doesn't work on your favor. That's the nature of the market. You cannot avoid that, because one person can say, okay, look here, there was this what we talked about earlier, the retest, and then there was a little bit of a high here. What if I took this high as a confirmation, because now we have this main retest here and then we have a second retest here. What if I took that as a confirmation for me to sell? That's what I'm talking about, that you can do everything correctly, but the market can still not work on your favor. So in this case, we can have like an argument about this case, because this is a scenario where the trade is clean, where the market is clear, it might be giving us sellers move, but unfortunately it didn't. It was just a slow down in terms of the sellers, and it was a kick in for the buyers. So that's it, guys. Thank you for watching this video.